Good morning, everyone. Welcome back to my channel and daily pre-market report. Today is Friday, 26 December 2025. Global markets are showing mildly positive, but Gift Nifty is indicating early weakness. So, today's session could be interesting, but not a trending day, but a stock-specific and range-bound day. Let's understand what's happening globally, what institutions are doing, and how we should approach today's market. Now, let's begin with US market performance. US indices closed in the green but with low volumes due to the holiday period. Dow Jones closed at 48,711, up by 39 points. S&P 500 closed at 6,938, up by 28 points. Nasdaq closed at 23,613, up by 51 points. What does this tell us? This move shows that there is no panic globally. Investors are still comfortable holding equities, but aggressive buying is missing, so global sentiment is positive but not very strong. There are three key reasons why US markets performed slightly well on day before yesterday. First, there was no negative macro news overnight. Second, investors are expecting interest rate cuts in 2026, which keeps long-term sentiment positive. Third, it is the year end, so many funds are adjusting portfolios and locking in gains. So, overall, US markets are in wait and watch mode, not a risk off mode. Now, let's come to Gift Nifty, which is very important for Indian markets. Gift Nifty is trading at 26,117, down by 60 points. This clearly suggests a flat to slightly negative opening. Early caution among traders despite positive global cues. Indian markets may see profit booking at higher levels, so do not expect a big gap up opening today. Now, let's talk about institutional money flow, which decides trend. Day before yesterday, FIIs were net sellers at 1,993 crores, while DII were net buyers at 2,531 crores. This data is very important. Foreign investors are still booking profits, staying cautious at higher valuations, but domestic investors are confident about India's growth, supporting markets on every dip. This is the reason why markets are not falling sharply. Now let's check the currency update. USD INR is trading at 89.77. A slightly weaker rupee means IT stocks may stay supported. Pharma exporters may benefit, import heavy companies may see pressure. Overall, rupee movement is neutral to mildly positive for equities. Now let's look at crude oil prices. Brent crude is trading at $62.37, up by 0.18%. Crude oil at $58.51, up by 0.18%. Crude is stable, under control, not a concern for inflation right now. This is a good news for India, especially for inflation management and current account balance. Now let's talk about the metals. The silver. Day before yesterday, silver closed at 2,24,301 per kg. Silver is outperforming business, strong industrial demand, renewable energy usage, hedge against inflation. So the metal prices suggest global demand stability, not slowdown. Coming to key levels for today. Nifty 50. Support levels, psychological level is 26,000. Strong base 25,900. Resistance levels 26,200, 26,300. If Nifty holds about 26,000, the market structure remains positive. Coming to Bank Nifty. The support levels are 56,100, 55,850. Resistance levels 56,700, 56,950. Bank Nifty will decide intraday direction. So what are domestic and macro observation? Year-end profit booking continues, FIIs remain cautious, DIIs continue to absorb selling. Volumes likely to stay low. Market will remain stock specific. So the market outlook for today. Global cues are supportive, DII buying strong, FII selling still present, Gift Nifty negative bias. So the final view, flat to mildly negative opening, range bound trading session, avoid over trading, focus on selective stocks. So that's all for today's pre-market report. If you found this useful, like the video, share it with your trading friends and investor friends. Subscribe for daily market insights. I'll see you after market hours with the post-market report. Until then, trade disciplined and manage your risk. Akash Bacha, SEBI registered research analyst and founder at Wealth Origin. Have a profitable day ahead.